All right. Good morning. Hello, and welcome back to the first live session for the day. UK live, 2:30 a.m. Eastern Standard. It is now, and once again a warm welcome to all the news subscribing members to our family YouTube channel. Uh, Just to give you an idea, there are several playlists which are created. I mean, you can pick up an educational playlist, and there are 15 videos where you can watch and go through each one of them. Uh, and two live sessions. We are doing it for about 30 minutes each. This one might continue for about 35 to 40 minutes. We got to cover up at least 9 trading instruments. We'll do our best to cover up maximum, but just to give a small update. As discussed last week, we are very close to already we've increased the number of instruments where we are keeping our focus, and our main intention sorry would be to capitalize 40 to 50 trading pips as what we did in the Australian dollar just before I came online here. All right, so quite a few number of trades have been taken, and including the Euro USD, the dollar index, gold, silver, Dow Jones, dollar CHF, Australian dollar, and Bitcoin. We've taken profits in Bitcoin as well. So if you are just joining, or if you are still not there in the Telegram channel, you should be looking to be there. If you are an active trader, it is at this point in time it is open for for all. Going to continue at least till the 31st of January 2018. All right, brothers and sisters, let's get started off with the wave counts. As usual, beginning the Euro USD chart setup. We'll have to, I won't be doing the sub waves at least for this session. Let's look at the main waves which we have been counting since long now. Waves 1, 2 extended, wave 3. Please remember, in the third wave extension, the fifth wave was the one which was extended. The fifth wave got extended. And then you got wave 4. Just a quick explanation, 5, 3 and 5, that was a zigzag. And an expanded flat in the second wave. All right. We still maintain sorry, the potential wave counts into the last and final leg. Waves 3, 1, 2, 3 are done. Might be seeing a fourth wave drop. That's what we are waiting for. It should come across any moment now. And finally, could be another leg up, which could be termed as the fifth wave, fifth of the fifth wave. All right. So that's the wave count we are still counting on as a high probable one. At this point in time, the short-term wave counts, if you want to study, just 1 minute. We've done this all. This is just about the same part, but since a standard protocol, I would like to follow each step, which helps us trade with confidence. Now you might want to note down the figures that we are talking about in the euro at this point in time. First of all, we are expecting prices to drop in a lower degree wave 4 and then push higher in the same degree wave 5, completing 5 waves of one higher degree. All right, step number 1. After this is done, now we don't know we will be watching out closely around the 20, 60, 70 mark. That's the first Fibonacci extension, and below that we'll be watching the 1900 handle. All right, so short now we might consider reversing for the fifth wave. Then watch out for 1500 support being taken out at least as the first wave A probably, then B rally, and C. So finally we should be somewhere around the 1.1 mark. Now this is not going to come very fast very soon, but once we have this bigger picture in our mind, I think this is a trade planning for almost 1 to 2 quarters of 2018. All right, so we are planning. Let's have the bigger picture in mind. 2 waves of a lower degrees right now, down and then up, and then wave A, B, and C. So we're going to play around 2 smaller waves and 3 larger waves in the coming weeks and months in the EURUSD. All right. Looking at the 4-hour chart, to simplify matters, I would like to plot wave A and wave B done now. That was not it has nullified the triangle scenario after printing highs at 2275. I think we've got AB, and now we are very close to, we are already underway. Maybe at a smaller degree I think I can do wave 1, wave 2, and then 3, 4, 5. I need to get rid of this okay. Waves 1, 2, and the 3, 4, 5 going dropping lower. All right, simple Fibonacci extensions of the A wave is probably indicating we should be able to book profit. See, what I'm doing now is we will go for a bit longer term targets in the euro, in the dollar index, in the gold and silver. All right, 4 primary trade pairs, and for the dollar CHF and the Australian dollar and any other, if you're going to take the trade call, then we will try to keep our intraday profit margins to around 40-50 points, and start building the pip counter. All right, okay, just on that I would like to remind that from now on there will be 3 categories of points that we are counting. One is the currency and metals, the other one is the crypto, that is Bitcoin, and the third one, which we have just started yesterday, is the Dow Jones, the indices. All right, so at this point in time the result sheet is about 1200 points in the currency and metals, about 7,000 points now in Bitcoin after booking profits just before coming online here, and indices we have not yet opened the counter on either side. Right, so that's the strategy and plan. Wave A, wave B, and let's see where the C wave is going to end. If it's going to go 5 down, which 1, 2, and 3, 4, and 5, or it will go all the way down towards the 1900 handle. All right. The second let's cover up all the standard instruments that we normally discuss. Okay, dollar index is now gradually picking up. The larger term wave counts, waves 1, wave 2, 3, wave 4, and pretty much similar to what we discussed in the euro. We'll be counting on the same probability. But on the other side, let's say that's the first leg, the first wave, wave 2, and then we are mostly done with wave 3 now. We might be we are already into a rally mode here. The fourth wave could terminate somewhere in the vicinity of 9150 towards the 9250-60 region. That should be the wave 4 termination point, and wave 5 printing lower. All right. So the same story, but on the opposite side for the dollar index continues. All right. And if we are putting across the Fibonacci ratios, Euro USD, we calculated the potential rally after the two smaller waves, or the two waves of a lesser degree is done. It is expected to rally towards the 1.1 handle. Similarly, the dollar index, after completing the fourth and fifth waves respectively, of a smaller degree to complete them, or the larger fifth wave at a higher degree, we are expecting these levels to be taken out, 95 and the 98.50 handle. All right. Now this, don't take this as a very short-term picture. We are going to make money if we have the bigger picture, the larger picture, probable larger picture in mind, and we might be under good control. First long around 92, and then short with another low, probable low around the 89 handle, or around the 90 handle. All right. And then rally and big drop and another rally, this ABC. All right. So 5 down and then 3 up. I think we've got a trade plan here for several weeks to come by. All right, so we'll be executing these plans now. Okay, dollar CHF, that's one more instrument that we've added. If I would like to give you a small potential wave count in the dollar index, it normally moves in tandem with dollar CHF normally moves in tandem with the dollar index. I think that was wave 1, 2, sorry. A, B, C, D and E. I think that was a barrier triangle, looks more like a Beria triangle pattern. uh, so that was wave 2, and dropping lower until the 9450 was the third wave. Wave 4 and the fifth wave. So 5 down, looks like an ending diagonal structure here. Waves 1, 2, 3, 4 and 5. That was an ending diagonal, right? So at least 5 with just about the 5 waves down, we can expect maybe an ABC rally, ABC kind of a rally. Could be A, B, and maybe we are just across producing a standard flat. If it is a standard flat, we might see a rally coming all the way through the 1 mark. All right. Should I plot it C here? Probably yes. But what I'm planning is the moment we come out of the dollar index, maybe somewhere around the 97, dollar CHF would be trading around 97, 97.50. We will be exiting at that point of time the dollar CHF as well, because the other probability is we've got wave 1, 2, 3, maybe wave 4 and then 5th wave. So yet another low could be possible. The dollar CHF will play in tandem with the dollar index. We plan to exit around the 97, 97.50 mark. All right. That's the 4-hour chart view where we might be having waves 1, 2. Could be possible that the 5 waves are done, and that's why we went long here. Right. At least we can expect a 3-wave rally towards the 97.50 handle. So for those who are just joining, not present in the Telegram channel, you might want to still consider going long with the stop just below that low and targeting 97.50. If there is any change in the trade plan, please watch out for the Telegram channel. Those who are interested to join, it is at t.me/Japee. You're most welcome right now until 31st of January. It will be more than 2 months now where all these signals have been sent in a complimentary way. The Australian dollar, I think we traded and we took profits. So just to appraise on what's going on over there, it's a very simple wave count structure, I think. We a corrective rally gotten over. If you want to see a larger term picture, then that's the right view. Weekly chart. Let's spend some around 3 to 4 minutes here. We don't need to go back almost till the 2001, but just to give you an appraisal as to what has happened, we had an impulse, 5 waves, and that's not compressed properly. Okay, so the story continues in this way. One, we had an impulse here, wave 3, 4 and 5, that was wave 1 of one larger degree, followed by an ABC, wave 2, and then we got another impulse, 5 waves. We don't claim that to be wave 3, but as the most high probability wave count for now. Now this one cannot be wave 4, we know that, but what has happened until now is that an ABC, right? So that be A, or 3 waves, B, and then 1, 2, C waves would unfold into 5 waves, right? Wave 3 with wave 4 probably ended. It already ended, right? I think you see the nice little triangle structure here. Wave B, it dominated right there. That was the end of the triangle. 1, 2, 3, 4 and 5, that is A, B, C, D and E, and then a 5 waves rally to wave C. So I think that wave 4 is already terminated now, and with this story, if it remains intact and on the good side, we shall be looking to go short in the Australian dollar once again on a small retracement. So the fifth wave, fifth wave should go all the way lower. That should be a capital C, somewhere around the 66 or maybe just below the 68 handle. That could be the termination point of Australian dollar. Alright, so keeping this bigger picture in mind, what we did yesterday was we ensured that's a nice little evening star being produced on the daily chart. We will try to pull back one more short call or a retracement actually. Alright, let's see how this trade is going on, and be watchful on your respective channels. I think we'll get yet another entry point or a retracement. Right, so we'll give another short call. Right now we are flat in the Aussie dollar, but looking to go and sell on rallies one more shot. So we've done euro, dollar, CHF. Then there was we are also short in pound. The structure in pound is also resembling quite interesting fact. I will have to go back in time. the reason why we are doing this exercise to have the larger picture is that you and me are in tune with which way where we are standing right now. I think 1, 2, 3, 4, and 5. There's a slight congestion. I think that could be A, but on the safer side, we should also label this as 1. We never know. And then there was a good consolidation, multiple years, A, B, and C. Now, there is no requirement to place the trend lines and Fibonacci ratios, but I think we'll place the trend lines here, or we'll say wave 2, and then wave C again unfolding into 5 waves, right? So let's say that's wave 1, wave 2, and then let's change the degree here, waves 1, 2, 3, 4, and 5. Please remember these labelings are being done in a live session right now. We are live if you're watching me, or maybe in an offline mode. But so it's quite possible we might do an error, but we'll correct it if at all. And if you see something happening after that, you might want to highlight that on a comment, right? We want to make this channel as interactive as possible. That is the trend line. All right. So it all bottom down to one thing. We are all in the sell zone right now. Potential wave 4 gotten terminated there. Just extended a bit. Actually, we were expecting 3600 handle not to be taken out just 2-3 weeks back, a couple of weeks back, but it got extended. Still, we are in the vicinity of the 4th wave termination point. All right, we have went short right now, but we'll be taking short-term profits very soon, in the tune of 40-50 pips, or maybe an evening star being produced on a smaller time frame, maybe 4-hour or an hourly chart, and then looking to sell again on a retracement or a rally. All right, so short right now from around 39 75 80 region, very tight stop loss just above the recent highs at 4030, just above the high. All right, so that was pound story. The larger picture. And coming back to gold, yesterday, if you were there with me around these times, UK live and the New York live, we were talking about a probability of market, or especially in gold, printing one more high above the 1338 mark. That is what has happened. We are still absolutely in the sell zone of this trend line, which has gone burst. But be prepared, brothers. You never know what gold could do. It's all doing 3 waves right now. Maybe one more small spike high could be possible in gold. So if you're trading this metal, you've got to be very vigilant. Don't keep your stop losses anywhere near 1342 or 44. Your stop losses need to go around the 1359 mark. Until and unless we are below that, the situation demands for a break lower. All right, so but don't get stopped out just because you're placing your stop loss as to your comfort levels. All right, please don't do that. Specifically in gold, watch out for the lot size management as well. That could play a great role, big role in your equity management as well. For those who are tuning in for the first time, the bigger picture for gold remains intact as a triangle. Wave B, wave C, wave D, and a potential wave E in the making already. So if that is wave E termination, then prices would remain ideally below 45 and broadly below 1357 levels as well. That's an evening star also confirmed a few days back. It could be just pulling a sideways action right now between 1323 and 1336. Could be nothing else, nothing more than that. All right. So watch out for a dip towards the 1310 mark, and then we are soft targeting around 1236 mark. All right. Similar structure in silver, where we are holding our shorts, and the head and shoulder scenario still remains intact. This is what I would like to highlight once again. There you are. The recent boundaries, we are still on the 4 hour time frame. The recent boundary which is still being worked upon, as discussed yesterday, is A, could be wave B, and wave C could be just underway, with maybe the first wave done, the second wave consolidation going on. I think that should be wave A or wave 1 as an alternate, wave B or wave 2 as an alternate, and then there could be wave C or wave 3, which could be pulling prices lower. Those who are joining from India, for the local segment, we have given a pause at this point in time. But please remember, we will activate every possible instrument and services as far as possible after the registration or advisory registration process is done with the Security Exchange Board of India. With the new rules coming in, it is better to get registered before giving any kind of, no doubt it's going to be all free on YouTube, but it's probably that's the only aspect why we are putting a pause for the Indian stocks and currency segments for now. But watch out, in February I think we should be initiating that service as well. Alright, so we are looking around the 1550 mark. That's the support which should be taken out in the next major move or major leg in silver. Alright, I would like to spend at least 5 minutes on one chart which is now very close to a peak, and believe it or not, that's a major peak. And it's the Dow Jones. I'm sorry, it always takes a bit more time. I think I have to put it on hold for now. I think we got it. Okay. If you were there yesterday, we were talking about 29,300 sort of levels where uh, we should see a peak, and that's what exactly prices are trading right now. I don't say that okay that happened because of what we discussed yesterday, but we've got to keep these levels seriously into consideration now. uh, let's do a wave count. I mean that was wave 4, 6,399 at a very larger degree. I'm going to zoom in a bit from that part, and then we can plot 5 waves after that. Okay, so you can understand the fifth wave might be just getting over. Just 2 more minutes, and I think we'll be done on the Dow Jones. We had to discuss this last time, but could not do that. So let's discuss it now. That was wave one, wave two, uh, wave three, which went all the way towards the 18,000 plus handle, and then that's wave four, bringing us to early 2000 or early 2016 levels, 18th of January, 2 years back. And after that, if we start counting waves, we might have just completed the fifth wave. That was wave one, wave two, and then one, two, three, four, and five. Probably the third wave, very shallow wave four, or it could also be that the third wave is still extending itself, right? Four, and we are very close to the fifth wave being probably terminating right now. If we take a Fibonacci extension of waves 1, 2, and 3, it has also already exceeded the 38.2%, and it's right at the 61.8% mark. Now that is the second place where fifth wave would terminate if it is exceeded the 38.2% mark, exactly what Bitcoin did. By reversing below the 20,000 mark, I think that was the 61.8% of the distance traveled by waves 1, 2, and 3. So we are already short right now technically, but that's an aggressive trade call. At least watch out for, we'll be watching very closely on the daily charts as to what movements are happening for a conservative trading on the short side. So watch out for what's going to be like the price reaction around the 26,300 mark. All right, for a bearish call. So that's it for now. In this session, we've covered up quite a few instruments, brothers and sisters, and I think we'll be always improvising and gradually increasing our area of coverage of the instruments. Right now we're almost doing 8 to 9, where we started with only 3 in November. All right, but as I said, we'll keep 4 of them with a larger point of view, perspective view, and remaining we'll try and churn 50-60 pips if possible on the intraday segment. All right, so Once again, let's bring this session to a pause. As I said, it'll be around 40 minutes from now on. If you are wanting to touch base with the 8 to 9 instruments that we are trading, so kindly cooperate in that. It might be not for, I'll try my best for 30 minutes, but could be possible that we might extend another 10 minutes or so. Alright, so let's bring this session to a pause now, and I'll come back after a few hours during the New York live at 8 a.m. Until then, good luck for your trades, and please like, spread, and share these videos if you're liking it. If you're not yet subscribed, you should be looking to do so. Alright, look forward to see you in the next session. Alright, till then, take care and God bless.